Welcome to today's lecture, where we're going to be talking about the accounting equation, which is asset is equal to liability plus equity. Again, asset is equal to liability plus equity, right? And with this equation, it must be balanced, where asset on one side, liabilities and equity on the other side, right? Now, the business is actually an artificial person created in law, right? And this business owns the asset, and whatever asset that the business owns, right, someone else has a claim to those assets, right? So it's either other people or the owner of the business. So people that is responsible for the liabilities may include investors, the bank, or even suppliers of goods and services, and also the owner, which is responsible for the equity. Again, asset is everything that the business owns, and everything that the business owns, someone else has claim to it. Either other people or the owner of the business, or the owner of the business. So the business itself owes either of these two groups of people. Stuff that the business, assets that the business owns includes buildings, motor cars, computers, stock that they receive from suppliers, receivables, those are customers that they sold goods to, that needs to pay them money, pay the business money, and also cash that the business may have, right? So now all of these things that the business own may be as a result of receiving a loan from an investor, a loan from the bank, or goods from the supplier. And whenever we have to pay this, whenever the business has to pay the supplier for goods at a later date, it's called accounts payables, right? Also, these assets may be as a result of the owners of the business putting in extra cash, right? And also, the other thing that the owners of the business or the equity holders have claimed to is any revenues that has been generated by the business, right? It is as simple as that. And again, the equation, both sides must balance at all times. Now, what we have is that if an asset goes up, then there is a great chance that a liability or an equity must go up also. For example, when a business was first started, the owner might have put cash in the business, right? That means cash will increase, and also the amount that the business owe the equity holder will also increase. Now, sometimes for this equation to be balanced, sometimes if one asset class goes up, for example, the company buys an extra motor car, then maybe another asset group will be reduced. For example, if it used cash to buy that car, what will happen is we have an increase in cars and a decrease in cash, and the overall equation remain balanced. Alternatively, maybe one liability account or equity account may go up and another one comes down, so that it still allow the overall equation to balance. For example, the business may owe a particular supplier, and the owner decide to introduce more money within the business to pay that supplier. So we'd have an increase in equity and a reduction in liability, which cause the overall transaction to remain balanced. Thank you, guys. That is it. Accounting equation. Asset is equal to liability plus equity. Please remember to like and subscribe and join me in the Learn InLeague at learninleague.com. Please remember to like and subscribe to this video, especially if you need to see more of these nice short little videos. Okay, thank you and enjoy the rest of your day.